Hey friends, stock market is again fallen today and Sensex is down almost 4,500 points in the last couple of weeks. One of the major reasons behind this correction is due to FII pulling out money from the Indian market. In fact, so far in January 2022, FIIs have pulled out investment worth Rs 26,400 crore. Now this has been an ongoing trend for a long time now. One of the major reasons is due to the concern over the US Fed interest rate hikes. As there is a sharp rise in inflation in the US, it is expected that the US Fed would increase the interest rate multiple times in 2022. This has resulted in FII pulling out money from the Indian market. Another concern is due to the possible Russian attack on Ukraine. So there's a lot of geopolitical unrest and a concern over rising tension between US and Russia. Hence, this fall is not only in the Indian market but also in the US market. On top of that, there are also concerns over RBI increasing the interest rates to fight inflation in India. So it is not just one factor but multiple factors that are resulting in a fall in the stock market. Now the question is, what should you do in such a market condition? Well, the answer is simple. Grab the opportunity. The good news is that there is no fundamental problem with the Indian economy. In fact, just look at the quarterly results of IT companies. Majority of them have posted stellar returns. In spite of that, the IT sector has fallen drastically. I mean, not just IT sector, this fall is across the sectors. But I believe that the market has already discounted all the negative events in the current levels. At current levels, there are many companies available at very attractive valuation. So I would suggest not to worry about the fall in the market and keep investing without worrying too much about whether Nifty would touch 16,000 or 15,000. It doesn't matter. At the end of the day, if you believe that the Indian economy is fundamentally strong and the stocks you have invested in are fundamentally strong, then you should not speculate the bottom. In fact, speculating bottom is a very futile exercise. If you are a long-term investor, you don't have to worry about the bottom. In 2020 crash, when Nifty fell down from levels of 12,000 to levels of 7,500, how many of you invested your money? From those lows of 7,500, Nifty is now at levels of 17,000. I heard from thousands of people that they missed the opportunity to invest money during that crash. And currently, we haven't even seen a crash. It is just an 8 to 10% correction. So my point is that do not panic with this small correction. Look at the long-term bigger picture. Even if there's another 10-15% correction, that would create a huge opportunity to invest and create wealth in the long term. But of course, nobody can predict the market, so a better strategy would be to just invest systematically. And if you don't have money to invest, then just sit tight. Do not make panic selling. Just keep patience. And if that fall in your portfolio is bothering you, then please stop looking at your portfolio every 5-10 minutes. While technology has made investing very simple, one of the problems is that we keep looking at our portfolio every now and then. And when you see your portfolio down 1,000 times a day, and that too for weeks and months, you will obviously panic. So stop looking at your portfolio multiple times a day. Just focus on good businesses and try to identify companies with bright growth prospect. If the company is doing well, then it would eventually get reflected in the share price. And like I said, this fall has resulted in many companies available at good valuation. So just look at your portfolio and identify companies where you have invested and are currently available at good valuation. And simply top up your investment. Trust me, the investment that you will make in the bear market will give you huge returns when the markets will eventually recover. And always remember to invest in fundamentally strong companies. And I would again say that do not try to time the bottom. Nobody can predict the bottom. Just keep investing at dips. And remember that it is not the first time when the stock market has corrected. Yes, for a majority of young investors that have entered in the market post-COVID crash have not seen a bear market. But that's how the stock market behaves. In fact, it is always healthy for the market to correct after a long rally, otherwise the market becomes unsustainable. And that's what is happening. Now I keep hearing that this market crash would be like another dot-com crash of 2000 or another 2008 housing bubble crash and so on. But just look at what happened after the crash. In 2000 during the dot-com crash, Sensex fell down almost 50% to levels of 3,000. And today, Sensex is at 57,000. Just imagine if you had invested during that fall. You would be sitting on multi-bagger returns. Or during the housing bubble in 2008, Sensex crashed around 60% to levels of 8,000. And today, Sensex is up almost 8 times from those levels. So those who invested during tough times have created great wealth. Yes, it is not easy to invest when the market is falling. You need a lot of conviction, and that conviction only comes with right knowledge. So if you have invested based on tips in poor quality stock, then it is a concern. But if you are invested in fundamentally strong companies with the right knowledge, then this fall is only an opportunity to invest more. Now I don't want to stretch this video any further. I'm sure you are smart enough to make the right decision. I'll close this video with one thought. Just look at the long-term bigger picture. If you think that Indian economy has a bright growth prospect, then you should utilize this opportunity and keep buying on dips for long-term wealth creation. And keep patience. Market will eventually reward investors that invest with patience. Now tell me in the comments which stocks you are topping up in this market correction. I hope you will find this video useful. I'll see you in the next video. Till then, take care.